Your business is about to face something it has never faced before. Goods and services tax is coming to Guernsey. And the way you manage your numbers right now will determine whether this is a minor admin exercise for you or it's a serious financial headache. Here's what most business owners get wrong. They treat GST as an accounting problem. It isn't. It's a cash flow problem. It's a systems problem. And for some, it's a survival problem. Stay with me through this video because there's a point later on that most business owners completely miss, and it's the one that costs them the most. Let's start with point one. Understand what a goods and services tax actually changes for you, because this is where most business owners start from the wrong place. A GST, or a goods and services tax, is a consumption tax. It's collected at each stage of the supply chain. As a business owner, you become the collector on behalf of the states of Guernsey's revenue service. That's a responsibility that sits on your shoulders, not your accountant's. It's worth letting that sink in for a moment, because the mindset shift it requires is significant. You're not just running a business anymore, you're also administering a tax on behalf of the government. And that comes with obligations, deadlines, and consequences for you if you get it wrong. When GST was introduced in New Zealand in 1986, research showed that small businesses bore a disproportionate compliance burden in the first 2 years, not because the tax was complex, but because their record keeping wasn't set up to handle it. Guernsey businesses have the advantage of learning from those early adopter economies. The question is whether you'll use that advantage or whether you'll wait until the pressure is on and scramble to catch up like so many businesses did before you. Here's what changes practically. You'll need to register if your turnover hits the registration threshold, which is currently set at 300,000, and charge GST on eligible sales, track it separately from your revenue, and file regular quarterly returns. That means your current system of checking the bank balance on a Friday morning and calling it financial management is no longer enough. You're going to need real numbers in real time. Knowing what goods and services tax requires is one thing. Getting your records into a shape where you can actually meet those requirements is another. And that's exactly where we're going to go next. Point two, sort your records out now, not the week before your first return is due. This sounds obvious, but you'd be surprised how many otherwise sharp business owners are still running their accounts on spreadsheets, shoe boxes of receipts, or a system their bookkeeper built in 2009 and no one fully understands anymore. If that sounds uncomfortably familiar, you're not alone. And the good news is that it's entirely fixable, but only if you start now. I spoke with an accounting business that made the shift to cloud-based record keeping ahead of a major compliance change in their region. Before the change, pulling together the data they needed took 1.5 days of manual work every single time. After moving to a proper cloud-based accounting system with automatic bank feeds, that same work was done in, well, minutes. The practice owner said, and I'm quoting direct, "I was stunned at just how much information there was at my fingertips at the press of a button and how easy it was to prepare." That's the difference between being ready and being reactive. Here's what you need to do right now. First, connect your bank account to your cloud accounting platform so your transactions are pulled in automatically every day. No more importing statements manually. No more guessing what cleared last week. Second, use that platform as your online filing system. Store your invoices, receipts, and supplier bills digitally so your records are backed up, organized, and accessible if you're ever asked to produce them. Third, make sure every sale and every purchase is categorized correctly, because goods and services tax returns are only as accurate as the data underneath them. One thing worth flagging here, if you're paying your accountant to do data entry and basic categorization, you're spending the money in the wrong place. Get the right software doing the routine work and use your accountant for advice, not administration. You'll spend less and you'll get more. It's one of the most straightforward improvements any business owner can make, and yet it's one of the most consistently overlooked. Now, point three, and this is the one I mentioned at the start that owners miss entirely: protect your cash flow, because goods and services tax will expose any weakness in it. Pay close attention here, because this is where the real financial risk lives. Here's how the problem develops. You invoice a client for work you've done. That invoice includes GST. Your client takes you 60 days to pay, but your goods and services tax return is due in 30 days. So you've been paying tax on money you haven't collected yet. If your cash flow is already tight, that gap can be genuinely damaging. It could be survival. The business that feel GST most painfully are not the ones with the most tax to pay. They're the ones with the slowest collections and the least visibility over their money. And that's a problem you can fix before goods and services tax ever arrives. There are three things you can do now to protect yourself. First, send invoices immediately when work is done and goods are delivered, not at the end of the month. The faster you invoice, the faster you get paid. Two, offer multiple ways to pay. The more friction you remove from the payment process, the shorter your average collection time. Three, use your accounting software to monitor your debtors actively. Know who owes you, how much, and how overdue it is. Every week, not every quarter. Research from a major UK business finance body found that late payments is a factor in roughly half of all small business failures. Goods and services tax doesn't create that problem, but it does make it worse. If you're already collecting slowly, adding a tax obligation with a fixed due date puts really pressure on your working capital. Sort your cash collection process before goods and service tax arrives, not after. And I'd generally love to know, how long does your average customer take to pay you? Drop that in the comments below. It's one of the most telling numbers in any business, and I'd be curious to see where Guernsey businesses are sitting right now with this. On to point four, get the right tools in place, because trying to manage your goods and services tax manually is a risk you simply don't need to take. Your accounting software needs to do the heavy lifting here, not you. A proper cloud accounting platform will track your goods and services tax automatically as you go. It will separate it from your revenue so you always know what you owe, and generate your return when it's due without having to build it from a spreadsheet from scratch every quarter. It should give you a real-time dashboard so you can see your cash position, your outstanding invoices, and your up-and-coming obligations at a glance. In plain language, not in accounting jargon. That kind of visibility changes how you run your business, not just how you handle your tax. When you're evaluating your software, look for four things. First, automatic bank feeds so your transactions are always current. Two, goods and services tax ready invoicing so the tax is calculated and displayed correctly on every invoice you send. Three, digital document storage so your records are compliant and backed up automatically. Four, you want real-time reporting so you can see your financial position whenever you need it from any device, including your phone. The goal is to have a single reliable source of truth for your business finances, and one that you and your accountant can both access and act on in real time. The same business I mentioned earlier saw their revenue grow by 25% after switching to cloud-based systems, while cutting their preparation work by 90%. They didn't grow because the software was clever. They grew because they had good financial information at their fingertips, which meant they could help clients make faster, better decisions. Think about what kind of visibility that could do for your own business. Not just goods and services tax time and return time, but every single week of the year. And that leads naturally into point five, which is the final piece. A GST compliance isn't a one-off project. It's a habit you build into how you run your business from day one. The owners who find it easiest are the ones who treat their financial records as a live, ongoing system rather than something they tidy up before a deadline. Set a weekly rhythm. Once a week, check your dashboard. Review what's come in, what's gone out, and what's outstanding. Reconcile your bank. Flag anything that looks wrong before it compounds. This doesn't need to take long. With the right software and automatic bank feeds, 20 minutes a week can be enough to stay on top of this. The alternative is a frantic few days before each return, which is where mistakes happen and penalties follow. And once you've had one penalty, the stress of it tends to follow you into every subsequent filing period. There's a broader point here that's worth saying plainly, because being in business always involves uncertainty. Market shifts, costs rise, clients come and go. The owners who navigate that best are the ones who have good financial information when they need it. Being in business is like a journey. You know where you want to get to, but there might be a diversion along the way. To reach your destination, you have to keep your options open. And you can only do that if you have good, solid data and you know your numbers. GST, as much as it feels like a burden right now, is going to actually be a forcing function that makes you run a tighter, better informed business. Use it. So to pull all this together before we wrap up, understand what GST requires of you, get your records into a cloud-based system now, and protect your cash flow by invoicing faster and collecting more actively. Choose software that handles the compliance work for you, and build a weekly habit that keeps everything current. If you do those 5 things, goods and services tax doesn't have to be painful. It can actually be the moment your business gets properly organized for the first time. If this video has been useful, here's the most practical next step you can take today. You can download our free guide to goods and services tax. It's written specifically for Guernsey business owners and walks you through exactly what you need to do to get ready step by step. The link is in the description below. The guide covers registration thresholds, record keeping requirements, cash flow planning in general, because we're a couple of years out, and the software questions most owners are asking right now. It's free, it's practical, and it will save you a significant amount of time working this out on your own. Everything we've covered in this video is expanded on in the guide with specific actions you can take immediately. The business owners who come to us in the best shape are always the ones who started prepping early. Not because they knew more, but because they gave themselves time to act on what they learned. Don't leave this until 2028. The businesses that struggle with new compliance requirements are almost never the ones that lack the ability to handle them. They're the ones that ran out of time. Download the free guide using the link in the description. And if you found this video helpful, share it with another Guernsey business owner who could use it. The more businesses that get ready early, the better it is for all of us on the island. And let me know in the comments, what's your biggest question about GST right now? I read every comment and I'll use your questions to shape the next video in this series. So whatever's on your mind, whether it's about registration, software, cash flow, or something else entirely, drop it below. I'll see you in the next one.